Well, big positive overnight is that crude prices have moved sub the $73 per barrel. Manisha Gupta joins us to tell us about crude and all the action from the commodity space. Good morning, Manisha.
Morning, Nigel, and thank you so much for that. Well, yes, 10% down in October and 3% down in November already is how the crude oil prices are trading. And this all has to do with the kind of supply numbers that we are seeing. If you look at OPEC, the supplies are at 2016 highs. Saudi Arabia is producing almost at around 11 million barrels per day. And so is the case with Russia and US as well. So the three major oil producers in the world are responsible for nearly 1/3 of the global production. And the supplies, of course, have been increasing week on week and month on month. And that's pulled the prices down, despite the fact that the Iran sanctions are due on this Sunday. Also, what has led to bearishness in the prices is that US perhaps could be giving waivers on sanction to countries like South Korea, China, India, etc. And that could come today or tomorrow. And that's yet another reason that you have seen the speculative money walk away from the crude longs here. If you look at the speculative long positions right now, they are the lowest in nearly 1.5 years. And that tells you on how sharp the unwinding has been from these long positions, pulling the crude oil prices on the weaker side. Not just the near term, but the longer term supply situation seems even more bearish. So there's a hard chance that you would be looking at much correction on the higher side from crude from here. Well, yes, the spikes in the prices, the volatility is not ruled out, as you still have the Iran sanctions to tackle. You still have the OPEC meeting coming in. There still is the US midterm elections to look at, and of course the international geopolitical tensions, etc. But having said that, much of that already has been factored in case of the crude oil prices.
Okay, all right. Thanks so much for that, Manisha. Well, let's hop across to Mangalam. He's going to tell us what to expect from Godrej Consumers. Mangalam.
Well, Nigel, for Godrej Consumers, the stock has corrected a fair bit from the top, so it still trades at around 30 times 2-year forward earnings. Important to watch out for the India business. Now, this is one of those FMCG companies where half of the revenue comes from India, the other half comes from international markets. Total income on a consolidated basis seen at around 8.5% growth, 2,700 crore odd on the top line is expected. EBITDA growth of about 8%. That means the margins are more or less likely to be stable. A net profit growth of 11.5%. A number of 405 crores is on the cards. The India domestic volume growth is seen anywhere between 0 to 5%. That is what majority of the street is expecting. There is a fair amount of divergence out there. The volumes will be impacted by three things. One, high base. Second, there was the Kerala flood. And third, there is low growth in household insecticides. Remember, on the base, they had done a 10% volume growth. Household insecticides, why do we say it could be low? Because Jyoti Laboratories, they reported their revenues in the second quarter. Household insecticides came in about 20% lower, and this accounts for 40% for Godrej Consumers sales. So it could be Kerala flood impact for the household insecticides, again scattered rainfall across the country, and increasing trend of household insecticide incense sticks. For soaps and hair colors, 3 to 5% growth seen in the personal wash segment, about 12% growth seen in hair color. So that is something we will be watching out for. The international part of the business, most important is Indonesia. Recovery is something that the street will be watching out for, both sequential and year on year.
All right, Mangalam, the bulls, it seems that, they're going to be quite happy to wake up to this morning. But yesterday I was looking at the F&O market, and the only live indicator we have is the premium on the Nifty futures. That moved higher, telling you that there could be some longs that were created. How is it shaping out there?
Absolutely. You put the hammer on the nail as far as the live indicator is concerned, because the FIs, while they sold about 260 odd crores in the index futures, remember over the last 3 trading sessions, for whatever it's worth, they've been dipping on the long side. They started with 29% and now they're about 33 odd percent. But the index futures yesterday looked like there was some buying out there. 11 points has now moved to 33 points. And it is important to see what's happening at the 10,400 mark, because yesterday we saw some call writing out there for a pop of around 200 points. So that's telling you that 10,600 is where the street believes we could see the market go up to. While the 10,400 put, that one added about a fair amount of open interest as well. 5 lakh shares added out there. That's telling you that there is support at the lower end as well. But all in all, from this series perspective so far, on the downside, there is protection. FII longs in index options, they're more skewed toward puts. 61% long exposure is in puts. And more importantly, support on the lower side, because 65% of FII's short exposure is on the put side. And that's telling you that if there is downside, there is protection. And if there is downside, that could be limited given the put writing that we've seen.
Okay, all right, Mangalam. Thanks so much for that. Well, on that note, we'll wrap up on Power Breakfast. You stay with us. Bazaar Morning Call comes up next.